Thank you so much. Thanks for walking us through the project. At this point, I think, the investment is just sort of speaking for itself. It's a pretty amazing deal. I mean, if we think about it, it's an opportunity for a preferred equity position in a prime real estate market in San Diego, experienced operator, and 12% annualized returns near completion. 2-year hold. Like, we're really excited about this, but experience matters, right? Like, their experience matters, our experience matters. And each of you that are on this call, we're so grateful to have you here. We're invited by a member of Coastal Capital Onyx, but I wanted you to know a little bit about who we are as a group, because I think it's really powerful. And our mission is to empower high income professionals to build wealth through strategic real estate investments, enabling them to create lives of financial independence and personal fulfillment. This is what drives us. This is why we bring deals like this to you, because we want you to experience this financial independence and personal fulfillment. It's why we exist. So what does our team look like? Our team has a combined 70 years of real estate experience. We have in excess of $85 million of assets, either personally owned or under management. This encompasses over 3,000 doors spanning over 15 states. It's pretty amazing. Multiple of us are invested in California, and several of us even live in California. We have performed due diligence on the asset, on the sponsor, and we really believe in the risk-adjusted profile of this investment that we're bringing to you. We see this as an opportunity to diversify your retirement portfolio, and it's associated with the prime placement in the capital stack and minimizing exposure and reducing risk. During all of this, we're also building this amazing relationship with the sponsor, and they're actually vetting new equity deals for our group and our investors for the future. And we're really looking forward to down the road sharing these with you guys. And any investors that end up in both of those opportunities will actually get like an actual amplified return, a bonus return over normal real estate investments. But that's for the future. Right now, we need to finish this $2.2 million raise. So let's get to the nitty gritty. I see my next slide is up. Thank you. So funding deadline is Friday, December 27th. That allows us to have enough time for your funds to hit the account so that we can then transfer them over to the sponsor. Minimum investment is $50,000. As a group, Coastal Capital Onyx is anticipating a personal investment between 5 and 10% of the total raise amount. But really, we want to ensure that you guys have enough room so that anybody interested can get into this deal. We are in this with you. We will be investing right alongside of you. And we feel like that's really important. And, honestly, we see it as a great investment and we don't want to miss out on it ourselves. So what does the investment process look like? The first thing that you're going to do, Nathan, do you mind dropping in the chat once again, the link for the soft commit form? If you feel that this investment is the right fit for you, then you're going to click on that soft commit form. You're also, I'm sure, receiving this in emails from the person who invited you tonight. This is a small raise. We anticipate being oversubscribed. In the first week of raising, we're already at like 25%. So doing that soft commit form is going to actually help preserve your space in line if we do become oversubscribed. Once the funding window opens, you will get an email directing you to the investor portal. That investor portal is going to house all of the investment documents, the subscription agreement, the operating agreement. You'll need to read these, review these, and sign these. Once you have done that and committed to this investment, then you'll receive information on how to actually wire funds. And at the same time, you'll be asked to go through an accreditation process. This is a super fast process. You can either take the form to your CPA, have them do that accreditation verification for you, or you can use there'll be a link for an online resource that helps with this. It takes about 5 or 10 minutes. This is how I actually did it myself. You basically upload the last 2 years of W-2s, or if you're doing it based on net worth, you can upload those requested documents. Just as a reminder, accredited investor, an individual has to have earned at least $200,000 in the last 2 years each year, or $300,000 jointly with a spouse or partner. If you're going the net worth route, you have to have $1 million of net worth, excluding your primary residence. Finally, the member of Coastal Capital Onyx is going to be reaching out to you in the upcoming days to see if you have any questions. But for now, we want to go ahead and address the ones that are on your mind right now. And I see that we already have.
Is there any sort of additional upside, for example? And I think this is a good opportunity to explain the risk adjustment of this return, or the risk units, Isaac, I think that you've spoken about, and compare that to, say, something like a land deal.
Yeah. So I guess the short answer is 12% is kind of the cap return, but there's like a really good reason for that, right? The investment structure puts you in front of all the common equity, which drastically kind of reduces your risk in comparison to common equity. I think you were talking about this, David, is like, well, why would someone want to do this if they could earn 18% on another deal, right? And I said, I try to look at investing on a spectrum, right? As a spectrum of options, and kind of how many risk units I'm taking to get a particular return, right? And risk units can be a lot of different things, but in development, I take them as build risk, market risk, interest rate risk, right? All these things are out of my control that get harder and harder over time, right? And the farther you are from completion, right? So the fact that we're able to eliminate 90% of the completion risk and 90% of the duration and time risk and market risk, the return is compressed. But in comparison to if you started day one and you had to accept all the other risk units for that other 90%, would you really want to take that 90% additional risk for an extra 3% yield? The answer is probably no, right? You'd say, no, I'll just take the 12 and know that you're going to be done in April, know that it's going to cost what you say it's going to cost, know the market's going to be where it is, know where interest rates are going to be to a large extent, right? So you eliminate all these unknowns and you're really only giving up a few hundred basis points of return. So to me, it's a very, very strong investment option because of the structure. This pref equity structure is a very unique structure and kind of really fits in the current market environment they're in. You didn't see it a lot when the market was super hot. This is kind of a little tranche, I would say, for the next couple of years where maybe you see these opportunities pop up, but they're very attractive from a risk reward standpoint. The last thing I would say is you've seen a ton of institutional capital pour into creating funds specifically for preferred equity investments like this. The problem with them is they're gigantic. They're the Titanic, right? They move very slow. People that want this capital need to move fast and be flexible, and that's just not what they are, right? So they've had a lot of trouble finding places to place it. The people that have been successful in this space are teams like ours, right? That can move quickly and identify opportunities.